Hi there, I'm Vladimir Bakov, and I'm a professional trader and was previously a top hedge fund manager for many years. Today, I would like to give you a gift. It's called the Forex Trend Directive. I will explain how it works in a minute. First, I would like to remind you to leave a comment below about anything you read or use on this page. I'm always happy to help, and I will choose the 3 best comments and invite those 3 people to join me in my private members area, where I will teach them the same system that I used when I was hedge fund manager. Also, don't forget to register for my webinar on Thursday. I have a surprise gift for a few people who attend. You can find the link below. Okay, let me explain how this next system works. I think you will like it. So here is the chart, and after you upload the template that you downloaded, that's how it looks like. You have 3 moving averages on the template, and the 2 short-term moving average are 5 SMA, simple moving average. One of them, the orange one, is from highs, and the bottom one is from the lows, as you can see right here. Now the idea is very simple. We trade 2 time frames. Okay, so you look at any time frame you want and you call it higher time frame. Let's say 1 hour chart or 4 hour chart or daily chart. Okay, that's higher time frame. For example, I will work with the 1 hour chart. Then you choose according to the report you get, confirm the entry, and base your trade on the lower time frame. So what I need to see from the 2 time frames is pretty much the same. And let's start with the higher time frame. I will cover both buys and sells. For buy, I need all 3 moving averages to point to the upside, and better that the slope is bullish as well. I can see for all the moving averages, the slope is bullish at my point. Then I need 1 hour chart to close the higher time frame, to close above the highest moving average, which is the 5 simple moving average according to the highs. Then when I got this condition, I drop down to 15 minutes and I am looking to enter the trade. The way I enter the trade, it happens right here, as you can see, right? That's the 11th of February, same like here, of course. So what I need to see in order to enter it is same. I need the slopes of all the moving average to be up, which gives me good momentum of buyers. And I need a close above the highest moving average, in this case, the orange one, of course. So I got a close here, but the 1 hour chart confirmed only here. So here I can see it's good also on the 1 hour chart and the 15 minutes. It's perfect. So I can enter the trade right here. My stop loss would be below the 5 simple moving average from the lows, which is the red one, or the way I call it, the middle moving average. So my entry is right here, and the stop loss is right here, below this candle level of the moving average, the red one. And take profit is always twice bigger. So this is pretty much 1 to 1, right? Approximately. And this would be somewhere 1 to 2. Okay? That's all. As simple as it is. Now, there is one recommendation. If you have a monster close, like not here, but here, okay, and your stop loss will be big compared to the time frame you work with, simply ignore this trade. Risking 50 pips, 60 pips, 70 pips on 15-minute chart is not reasonable. Why I say so? Simply because you need to understand a very basic thing. We are looking to take profits. Now, our profit compared to the risk always twice bigger. So if I risk 1%, I want to take 2%. 2% can represent 50 pips profit or 60 pips profit. 2% can represent 200 pips profit. What is more probably to happen? Where are the biggest chances to happen? The market will give you 60 pips to your favor or 200? Of course 60, especially when you deal on the lower time frame entries, right? So basically we need the trades where the risk is the minimum possible. Again, it's visual, but you would agree with me that such risk is too big for 15 minutes, right? So it has to be reasonable, and you can see that's pretty small, reasonable risk. So when we plan to take a target as twice bigger from our risk, that's where we expect the market still to be able to provide us the move we want. Okay? So again, don't take trades where the risk is too big compared to the time frame you work with. Okay? Very, very, very important. Now for the sales. The sales, same idea, just opposite. What do I mean? The moving average has to point, all of them, to point down. Okay, and I need to see a close below the red one, which is the bottom one in this case. Okay, that was the highest one. Here is the lowest one, moving average, to close below. Now, we can see that here that there also was a close, attempt to close, but it was range because the slope was very, very, very flat, and that's was something I don't want. In this place, the slope started to be all good, right? So when it happens, I drop down to lower time frame, and that's what I am looking for. That's where it happened. Okay, so now I need same story. On the next candle, I can see the close below, and what I need to get and to confirm is that all three slopes start to show bearish slope. All three slopes of the moving average show the bearish slope direction. This one going down, this one going down, this one going down. Right on the next candle, right here. So, same story. I enter right with the end of the candle, beginning of the next one. Protection above the orange moving average of this candle. It's here. And my take profit would be twice bigger. Okay, so now you will see that the risk is very reasonable. It's very small, around 15 points only. And the target, 30 pips. The chances I take 30 pips in my favor are very, very big. Much bigger than if I would expect to take 200 pips or 100 pips when I trade on the 15-minute chart. Okay, so that's the idea, and that's the very basics rule. Now I want to cover two more examples if you don't mind, just to make sure we are clear. Same story once again. Okay, 1 hour chart, here we are with the close, right? Slopes on the 1 hour chart, all good. Here they weren't good. Here they start to show all together to the upside at this candle. I drop down to 15-minute chart, right? Just to go with an entry. And you can see that 2 candles after that on the 15-minute chart, I got my setup, right? So here is my stop right below the red one moving average, and my take profit is twice bigger. This example is really a good one because that's where it's better to skip, you see? Because the stop loss here is 55 pips. Okay, for 15 minutes time frame, it's better to skip. Okay, where it's best to enter, right on the next opportunity, like here. Okay, you see the slopes here on this candle start to be good again. See? Let me erase these lines. Here. The slopes on this candle start to be good again. All of them set to the upside. And my risk in this case would be, see, from here to here. That's all I risk. 25 pips. So my chances to take 50 pips as profits are very big. Much bigger than potentially take the 100 as it could happen from here. Okay, it's very, very, very good example. Okay, same we do for the sales. For sales, what we need, let's erase these lines, we don't need them anymore. Okay, for sales, that's what I need. Slope of all going down. Actually, here it's the slope of the orange is not good. Here it's very, very, very conservative. You can see here none of the slopes and the close didn't provide us an entry. Here The answer is yes. So I drop down to 15-minute chart and looking for a possible entry. I can see that right here on this candle, I got a very, very, very good entry because it also closes below all the moving average, right? And below the red one, and all of them with the bearish slope. So my protection is right here above the orange moving average as I go in a sell, right? Right here. Okay. It's reasonable 20, 25 pips stop loss. Profit is twice bigger, of course. So it's pretty much right here. And that's really all you need to know about the system. Very simple, very effective. And just stick to the rules. Don't force trading and don't take the one with the big risk. Pay attention to the slopes and start make profits. I hope you enjoyed my explanation of the Forex Trend Directive, and don't forget to leave a comment below. Thanks for listening.